Earlier talking about Yes Bank, the stock that's just pull up that 110% plus higher numbers tomorrow. Poonam is now with us. Poonam, what is the street anticipating?
Well, in fact, the street is anticipating some narrowing in terms of the loss. This time to remember, last quarter, Yes Bank did report nearly around 1,500 crore of loss. In this quarter, the analysts estimate a loss of anywhere around 600 crore, but there are quite a few analysts who expect the bank to return back to profitability. It will all depend on the quantum of the provisions that the bank does do this time, and hence the average profit which is expected by majority of the analysts is somewhere around 160 or 164 odd crores, with the maximum profit that some of the analysts do expect is around 700 odd crores. So yes, there is a possibility of still a minor loss in this quarter, or maybe some amount of profit also this quarter. I guess that would be important. Provisions, of course, are likely to remain high because the management did declare the stress of 10,000 crore book of watch list is there, and hence the slippages may again continue to remain fairly high during the quarter. The quantum of recognition that the management does would be fairly important. The amount of credit cost guidance that the management guides for would be again fairly important. Margins, of course, are likely to be under pressure. The loan growth may in fact decline anywhere around 6 to 8% YOY, and hence we should be seeing a fairly muted kind of an NII growth of just around 12%. Free income may in fact be declining this quarter, and hence we should be seeing the overall operating profits also come under pressure this quarter, and the provisions, of course, may be staying high. So yes, watch out for Yes Bank. Having said that, if you look at the management commentary so far, they of course have a board approval to raise $1 billion worth of capital already, and my colleague Ajay Sharma just recently reported that PE investors as well as domestic investors are interested to put in money of nearly around $850 million. Of course, it would depend on the pricing would be fairly important, and the NPA recognition would be fairly important for Yes Bank. So watch out for the commentary on that front, and of course watch out for the commentary in terms of the recognition of the IL&FS exposure and the strategy ahead by the new management in order to garner more capital, recognize the NPAs on the balance sheet, and also in order to further grow the liability franchisee going ahead.